one of the things that's been bad about deflation is it does tend to be related to profitability in corporates coming down. So at the end of August, the government released profitability data for China in July. And those data showed that profits had fallen to around 5% of GDP. So this is very low compared with China's history. And that profitability data, it tends to be closely related to what's happening with PPI. So generally speaking, when PPI, which is producer price inflation, upstream inflation for commodities and so on, inputs for the manufacturing process, when PPI inflation tends to be higher, corporate profitability in China tends to be better. When PPI is coming down, corporate profitability also tends to fall. So from an equity market perspective, it would seem obvious a bit of inflation is better because inflation tends to mean that profitability is higher, and profitability for the equity market is obviously something that's very important. So that's one reason. The second reason why inflation tends to be thought of as beneficial is because if there's deflation, then it tends to mean that real interest rates are rising. And real interest rates rising is something that tends to restrain economic growth. It makes borrowing more expensive. It tends to make companies less willing to go and invest in capacity. Also, it tends to mean that, particularly in Asia, when you've got current account surpluses anyway, it should be something else that reinforces the strength of currencies. And so particularly if you go back and think about Japan's deflationary experience, one of the problems that Japan had was that when deflation came down and therefore real interest rates rose, then there tends to be a currency appreciation, which reinforced the deflationary pressures that Japan was also feeling.